We are set to go.
Set to go. Well, hello everyone, and thank y'all for joining us. We're very excited today for the second installment of our two-part webinar series. And last month we talked about how to use a model for fundraising, and we actually had a lot of really good feedback from that presentation. But don't worry, because if you missed that, we video recorded it. It's on YouTube. We'll follow up with all the details there. But today we're going to be going over the other use case of a financial model, which is business operations. And this is actually a really exciting topic for us because most folks ignore this application of a financial model. They typically use it only for the due diligence process of a fundraise, which we think is a shame because we believe that a financial model is just as useful, if not more useful for founders in an operational context. And hopefully we will convince you of that today. But before I get into that, I'll cover a few housekeeping items, which I think Stephen already touched on a little bit. Running through the presentation first, we're gonna have a Q&A session at the end. And we scheduled this for an hour. This presentation piece should not take anywhere near that long. I think it should probably fall around like 20, 30 minutes. So we should have plenty of time for questions, and we'll probably end up getting you guys out a little bit early today, which is nice, give everybody a little bit of time back. But if you do have questions that kind of pop up during the presentation, go ahead and throw those in the chat. Steven's gonna be answering them while I'm speaking. Then anything that we just need to have a deeper dive on or would like to address as a group, we'll do during the Q&A portion of the webinar. And Steven's gonna be recording this session. So after this, I'm gonna follow up with an email, and we will we'll give you guys a copy of the slides, everything that we go over here, and we'll give you a link to the recording, which we'll put on YouTube. All right. Brief introduction. So who am I? I was looking at people who are joining. I think I know most of you all that are on the call. For those of you who don't know, I'm Logan Burchett. I'm the co-founder and COO of Forecastr. And before I go any further, I'll say if I don't know you personally, then I'd like to. And as a part of my follow-up, I'm going to be sending a link to my Calendly. And so feel free to set up a meeting with me. I'd love to meet everybody that's on this call. But as for background, I've been pretty much in finance my entire career. I started in the financial planning and analysis department of a middle market company in Cincinnati, Ohio. And then eventually I made my way more towards asset management, working in the Kentucky Pension Fund, helping to manage their stock portfolio. And then my most recent job actually was at a company called Venture First. It was kind of a outsourced finance department / CFO for pre-seed up to Series A startups. And whenever I worked there, I built tons and tons of financial models, helped raise a bunch of money for companies that were out raising, seen pretty much every deal under the sun at this point. And I got to work with a whole bunch of different companies and meet a lot of really cool and interesting people, a lot of which are still my friends to this day that I keep in touch with. So it was a very rewarding career. And as I was doing all of this, I picked up a few things here and there, and I'll be sharing some of the tricks that I learned over the years on this webinar. And then eventually I went on to go found Forecastr with Stephen Plappert, who's on here. And we'll talk about Forecastr more here in just a second. But speaking of Stephen, like I said, he's going to be on here helping me out today, answering questions. He'll be participating in the Q&A. He's the CEO of Forecastr. He's got a lot of the same finance chops as me, two-time founder, gone through Techstars twice. Awesome experience in this area. So he's got some good things to say here. If you don't know Stephen, you should know him as well. I'll give you guys his contact information whenever I do my follow-up. All right, so I will briefly cover kind of what is Forecastr, right? So in a nutshell, we help founders build amazing financial models online so that they can make better decisions, offer better reporting to investors, and overall have more success, confidence while fundraising and also while operating their business. And our main reason for building this was like, we all know how financial models get built today, right? Like usually it's an investor or a mentor asks you for a financial model or a set of projections, and you scramble to throw something together using some template that you find on the internet, or you just bang something out in Excel that you really just like hope doesn't get laughed at. It's a really tough process for a lot of people. And it's actually so tough that In our last job, people will pay Stephen and I thousands of dollars just to build them a financial model in Excel so that they didn't have to worry about it, which we always thought seemed silly, mainly because as a founder, you really need to know your financial model. You really need to own your projections, and it's really not good practice to pass it off for somebody else to build it for you. And so this kind of creates a problem in the market because it's super important to have solid, defendable numbers. But the act of actually learning how to build a financial model and learning Excel is incredibly difficult. So we wanted to create a solution for that. So what we've created is an online financial model with a simple UI that you can build online and really help you understand your projections. And it makes models much more meaningful and powerful and gives founders a tool that can withstand really heavy scrutiny from investors, and it can really enhance operations. And I'll give you a quick demo here just to show you what I mean. So this is a forecast that we made pretty quickly in Forecastr. So you can see you've got kind of the online platform. You can drill into individual revenue streams, see price, churn, current subscribers, all kinds of stuff. Pretty dynamic here with the interactive graph. You can analyze different time periods. You can look at customer growth channels down to we have paid ads on this one, partnerships, organic web traffic. So you can really customize it to your own business and understand how you're growing and the trajectory of your business and the potential that it has. So that's kind of what it's looking like right now. And the heart of what we're doing is trying to make forecasting easier, more meaningful for founders and investors. Because Steve and I love forecasting, but we really don't like Excel, even though we've used it professionally and we're deemed like experts by a lot of folks. We don't like it, mainly because it's clunky, it's hard to learn, but above all, it's just unstandardized, which means that every model that a founder makes is different, so it's impossible to compare data and automate. And Stephen and I see a world where every model is still unique, but it's in a standardized platform. So that way you can compare yourself to cohorts, link up data sources, and it'll make you smarter and more efficient as a founder. And then we'll also have a team of experts that'll help you along the way and build your initial model with you to answer any questions that you have and just like really help the process along. So kind of think Carta, but for financial modeling. And technically, while we're pre-launch, we're currently servicing some select SaaS companies with this site like hybrid software services product. So if you have a SaaS business and you're interested in Forecastr, let us know. We may be able to start working with you right away. You can either DM Stephen here on the chat, or you can just shoot me an email at logan@forecastr.co, or just reply to my follow-up whenever I email all of you guys after this. And if you're not a SaaS company, then we encourage you all to apply for our beta, which you can find on www.forecastr.co. And like I said, we'll even help you build the model when the time comes. But anyway, that is enough about Forecastr. Let's jump into what we're all here and excited to learn about, which is how to use a financial model for operations. So to set the stage, let's start. I'm going to start by kind of identifying these key areas of the model, because as we know, a good financial model has a lot of moving parts. And here I'm defining areas as specific sections of your model that will require a thought out game plan that you will build and then you will use in order to manage your business and build the plan. So I've broken this down into 4 separate sections, and we're going to take a deep dive into each of these, and we're going to walk through specific examples on how to build them and how to use them as guidelines to run your business. But we'll start with growth plan. So this is the plan that's going to articulate the strategy that outlines how you plan to acquire customers. And this plan should be detailed, and it should have projections or targets for each individual growth channel that your company's utilizing. And that could be direct sales, Facebook, conferences. It could be a wide array of things. And you shouldn't just have targets for the total number of customers acquired by channel, but you can actually break this down and have individual targets for each step of the growth funnel. And we'll talk about all of that here in a few minutes, and I'll give you some specific examples here. And then coupled with the growth plan to the right of that is going to be the revenue plan. And these are slightly different, but there's an important distinction. So the growth plan is going to articulate how you are acquiring customers, but the revenue plan is going to articulate how you're monetizing those customers. So if your business has a variety of offerings that a customer can purchase, then your revenue plan will determine which products or services that these new customers are going to be buying. And then a revenue plan will also cover things like churn customers, pricing strategy. There are a few other things like a little nuance in the revenue plan. Your expense plan is really going to be more or less the same thing as your budget. So you're going to need to create an outline that details everything that you plan to spend money on. And this could include salaries and benefits, rent, marketing, etc. And once you have those targets put into place, you have a framework in which to manage your budget to make sure that you're not overspending. And this is how you really ensure that you're properly managing the cash flow of your business so that you're not going to run out of money. And then finally, your capitalization plan is what's going to detail your strategy for ensuring that the company doesn't run out of money. And this can include target dates and amounts that you're going to be raising for debt, equity, hybrid of the two. But it's really how you're going to be going about to making sure that the company is always funded and has enough cash in the bank. So we're going to dive into each of these, but before we do that, let's talk a little bit about cadence. And by cadence, I mean how often you should set the forecast and how often you should interact with it. So we recommend focusing heavily on quarterly forecasts for each of these areas that we just talked about for your model. And your forecast is obviously going to span way further than one quarter. But when it comes to operationalizing your forecast or your plan, it's really important to focus on specific goals in a banded time frame. And I think about this kind of like I think about sprints for developers. And the targets that you set for that forecast will essentially translate into your quarterly OKRs or KPIs, key performance indicators. And setting up this process will allow you to track the targets that you've set for yourself, and you're always going to be comparing your forecast to actual. And at the end of the quarter, you're going to reforecast, which will then create new targets or new OKRs, KPIs for the company for the coming quarter. And then doing it this way also allows you to do a formal analysis of the previous quarter, understand where your targets fell short, and make necessary adjustments to your strategy. And depending on the founder, depending on the situation, these targets, or at least several aspects of them, could be shared with the entire team so that everybody's very aligned with the company's strategy and the goals that they need to hit. So I'm going to jump into an example of the first area of the model, which is the growth plan. So in this example, you can see what I mean whenever I say that you should set detailed quarterly targets. So we have this model sectioned out by quarters, and the targets are broken out specifically by each individual growth channel. So by looking at this forecast, you can see that this hypothetical company is relying a lot on social media advertising and influencers to grow. And in the current quarter, you can get a sense of the growth strategy of the company and the areas that we should focus on in order to drive these new customers. So if you look at this, it doesn't really make sense for us to be spending a ton of time doing prep work and devoting a lot of time to conferences, because our target for this channel for the entire quarter is only 2 new customers. But we should, however, spend a lot of time optimizing our Facebook advertising strategy and ensuring that we hit our mark there. Because if we don't execute on our Facebook strategy, then we're going to be very unlikely to forecast. And if we spend a lot of time and energy and focus in really closely on this Facebook strategy for this quarter, and we still come in drastically under forecast, it might make sense to either see what we can do to optimize that to try to get it to where we can hit those targets, or scrap it and then test another growth channel that may be more meaningful for the next quarter. And you can see that in an effort to optimize our business, we focus really hard on specific short-term targets. And then these targets are what break down and then fit into the broader vision of the company, which fits in the context of our 5-year financial forecast, or our 5-year financial model that most people are familiar with. And In doing it in this way, we can also prepare ourselves for larger growth channels that we see coming down the pipeline. So again, looking at this plan, you'll notice that we have a pretty diversified, we have pretty diversified growth channels, but then there's this huge component of future growth that's coming from influencers. And since this is expected to be such a massive part of the company's future growth, then as managers of the business, we need to ask ourselves what we need to do in Q2 to ensure that our influencer initiative goes off without a hitch in Q3. So just to reiterate, you want to set targets that you'd like the company to hit. You'd like to outline a strategy for hitting those targets, and then you need to track and then measure just relentlessly. And how closely you track these is really up to you, but we recommend breaking this down into different segments of the acquisition funnel in your plan in order to figure out how to optimize your sales process. So I'm going to show you what I mean by this by digging into a specific example, this one being direct sales. So you can see that in May, we're forecasting that we will get 4 new customers from direct sales. But how specifically are we getting those customers? In this case, we've set a target for the salesperson to reach out to 100 people. And this could be a bunch of different ways. This could be by cold calling them, sending out 100 emails, just whatever process makes the most sense for that salesperson. They're getting 100 people, reaching out to 100 different people. And then of those initial 100 outreaches, our goal is to get 10% of them, or 10, to agree to come to an in-person meeting. And then from there, our goal is that 80% of those folks, or then 8 of them, will follow up for a demo. And then we'll finally be able to convert 50% of those, or 4, down into paying customers. And by setting the stage individually, we can figure out where in the process that we can optimize. And it's also really useful to track the targets for all stages in the sales process. But remember that every metric that you set in Forecast is a metric that you should be willing and to devote time to tracking monthly. And a good rule of thumb is to track down to the controllable metrics. So in this case, the salesperson could always reach out to more leads or follow up in a different way to convert into the first meeting. But breaking it out like this is a good way to communicate targets so that everybody knows what they should be aiming for. And then once you've set these targets, like I said earlier, they essentially translate into your OKRs or KPIs or whatever system it is that you're using for the quarter. And so continuing with our direct sales example, we can look at how our salesperson compared to their targets in May. And in this case, we fell short of our outreach target, but we still hit our targets for companies making it to that first meeting stage. We fell short of demos and final conversion down into customers, which tells us the last 2 steps of the process need the most work, particularly converting from demos down into sales. So in this case, we can look at utilizing a new software in the demo meeting, like our friends over at DemoFlow, who's another Techstars company. And like maybe we need to change up our demo cadence, and maybe we need to spend more time customizing a demo for each company. And like doing it in this way, breaking it down in a process like this makes you think really critically about your conversion funnel. And it allows you to optimize each individual step down into where you get it just right. And we're using the example of direct sales. You're going to want to repeat this process for each individual growth funnel and figuring out where you can optimize as needed. And after targets are set for the quarter, you can do a forecast to actual every month, like the one shown in this slide. And in the middle of the quarter, you can actually run tests to see if you're improving these metrics and trending more towards these targets that you set for yourself. Like in the example that we just used using DemoFlow, you can implement a software like that and see if there's any kind of like iterative improvement alongside those goals. So now let's talk about how those growth targets that we just set are going to translate directly into your revenue plan for your company. So here you can see that we have this new subscription line, which matches the new customers that we created from our growth plan. And we can take those new customers and allocate by percentage who is buying what product. So in this example, we're assuming that our fake company only has 1 product to sell and that all customers go here. But in reality, you could break it up, telling the model that 20% of these new customers go to product 1, and then 50% go to product 2, and so on. And these are really important targets as well. If you're trying to push higher margin or new products over older ones, you'll want to create a goal in the forecast to track, just to see who is actually buying what and if things are moving towards the trajectory that you've set for the company. And you also want to include other really important metrics like churn subscribers. Churn rate is a huge variable for growth. And if you're trying to improve your churn rate, like most of us are, it's important to call that out and set targets in there just like everything else. And just like in the growth plan, we set important metric targets, we track them heavily. And this is where the real power of a financial model comes into play. It forces you to set a goal for the company and then track towards that goal. And typically what is tracked and measured is something that gets improved. Okay, so now we're gonna move on to the cost section of the model. And this is where you're gonna go down and create a budget for each category. So in this example, we're looking at salaries and benefits specifically. And I call this one out mainly because it's most likely everybody's #1 spending category. So it's the one that I wanted to zoom in on the most. In your model, however, you're gonna wanna do this for all of your spending categories. So you'll wanna break things down for rent, for marketing, for professional fees, anything that you're spending money on, it's gonna require a cost section of your model. And you can see that you have specific targets for each position in this example, which are gonna impact our budget. So here we're expecting to increase the CEO salary in August. We're also gonna be hiring a chief of staff, and we're gonna be bringing on some sales and marketing folks as well. And each of these items are important because of their cost impact, but then they're also important KPIs for us to focus on during the quarter as well. So if, for example, the plan is to hire a chief of staff in Q3, there's likely relevant prep work that we should be doing during the current quarter, like writing job descriptions, doing interviews, like all kinds of like just prep work that we need to set the stage for them coming on. And you can also see how this communicates the vision of the company and keeps everybody on track as well. This company is focusing on growing a sales team aggressively for the next several months. This tells me that they're probably past product market fit and focusing more on growing and trying to acquire new customers. And then this is important in controlling cost as well as building towards the overall vision of the company. So it's really two things. It's creating and then executing on strategy, but then it's also making sure that all of your costs are accounted for so that you're not hit with a cash shortfall. And then the final portion of the model that we talked about involves our capitalization strategy. So like with the hiring plan, targets for amounts raised indicate actions that you'll be taking now in order to prepare to close those rounds. So looking at this example, we're hoping to close our $1 million seed round by the end of June. And in order to hit this KPI, we'll likely need to focus on final tasks for closing out this fundraise. That could be things like getting out wiring instructions and just ensuring that all of the cash is hitting the bank account. But it's also really good practice to just roughly outline plans for future capitalization. So for this example, we're showing a Series A round sometime off into the future. And this might not be for another 12, 18 months, but it's good to think through kind of high level targets to hit between now and then in order to achieve milestones that we as founders believe we need to get done for a Series A. And even though long-term plans like these sometimes change, it's good to set an objective in the form of a plan and then constantly moving the company forward towards those objectives. So once we've set our plan for each key area, it's really important that we track against the plan. Otherwise, it's easy just not to hold ourselves accountable. And that's what allows these types of goals to slip. So in the example above, you can see how we inputted our actual data next to our forecast. And you can see how our forecast looks in comparison to what's happened historically. And this is great for side-by-side comparison to quickly gut check whether or not our forecast is reasonable. But it also forces us to do a forecast versus actual comparison every month, kind of like what we showed earlier in the growth forecast section. And taking the time to go through on a monthly basis and report on your forecast will end up bearing fruit It keeps you super honest and ensures that you're always 100% on top of your numbers. Um, and also helps you to identify abnormalities or areas that you need to focus on. So, for example, did you have a huge legal bill last month that wasn't expected? Or was your churn rate higher than anticipated? Is your sales team not performing to expectations? I mean, getting in a rhythm like this forces you to look at the data and answer those questions that'll arise on a monthly basis. So we've kind of touched on this here and there, but I wanted to come back and kind of like in the presentation, refocusing on the cadence in which you should interact with people. And like I said before, we said that we wanted to lock down a version of your plan every single quarter, and that'll set kind of your OKRs, KPIs, whatever it is that you need to be focusing on for that quarter. And once you have this plan locked down, you'll want to review it throughout the month in order to track progression towards your goals. And this will keep you focused on priorities. And if you're focused on specific targets, it empowers you to ensure that your goals are met. And you can do this casually, and you can just review the plan when you need to. Or something that we recommend doing is maybe just carving out 30 minutes per week in order to review with the team just to see how you're tracking towards your goals for that month. And then on a monthly basis, one thing that we really strongly recommend is implementing monthly finance meetings. So Stephen and I always made this mandatory whenever we were outsourced heads of finance for all of our portfolio clients. This is a team meeting. It can be 1 to 2 hours, and you do a deep dive into the forecast and see how you compared to your plan for the quarter. And you always focus on the key areas of the plan, so growth, revenue, cost, capitalization. And this just, again, ensures that you're on top of your metrics, and implementing these meetings will almost guarantee that you will not have a surprise cash shortfall at any point in time. And there's a accountability measure to it as well, because you'll dig into your growth plan. You'll understand who is hitting their targets and who's falling short, and which strategies are working and which ones aren't. But we also recommend sharing key stats like this with investors, mentors, and even in some cases, it can even be employees of your company as well. And then finally, at the end of the quarter, you'll have the opportunity to take what you learned from the previous quarter, adjust strategies and targets, and then do a complete reforecast. And this is where you can shift focus where needed, and you can cut ties with inefficient growth strategies, and what allows you to kind of steer the company forward, but you do it in these little quarterly sprints. Okay, so hopefully you guys found some of that helpful. I promised that I'd get you guys out of here a little bit early, but I wanted to devote the rest of the time here to Q&A. So this is where, if you guys have any questions, or if there's anything that we need to take a deeper dive on, Stephen and I can answer anything that you guys would like. And Stephen, I can't see the chat right now because I guess I'm presenting, so I don't know if there's anything popping up here.
Nothing in the chat so far. But guys, yeah, I mean, feel free to put your questions in the chat or come off mute if you like as well. And general or specific, no such thing as a bad question. So feel free. And of course, if Logan said everything so well and so comprehensively that there are no questions, and that's obviously okay too. But we'll leave it some time here. Yeah.
Yep.
I apologize. I entered late. This is the slides you were showing were PowerPoint slides. Is the software built? And did you show at the beginning? Did you show the actual software?
Yes. We did show kind of a video showcasing what the software is like today. The software is still very much being built. Now, we are very, very close to releasing what we're calling our MVP, which is going to be a forecast that's available for SaaS companies. But it is still under construction. We're still technically pre-launch, but I mentioned earlier in the presentation that we're to a point now where we're actually able to start working with some SaaS companies now And other business models are probably just a few short months away.
And Logan, we got a couple more questions here in the chat. The first one is, does your software include guidance, step-by-step style building of your initial forecast? I'll jump in and answer that. And Jeremy, yes, it does. So our software is kind of a hybrid model, if you will, where we do a white glove kind of onboarding initial model construction with our customers. And so if you purchase Forecastr, we'll ingest some of that initial data and we'll build the financial model with you. So we'll both kind of coach you on financial modeling. We'll also coach you on how to use the platform itself. And we'll really kind of get into the weeds of your business and help you build that initial forecast. And then after that, you're ready to go to kind of run with the product and use it on your own. Obviously, we'll be available in online chat support. But we also do offer support packages as well. So you can also purchase a paid support package above the software to get some level of dedicated support. If you'd like to have really almost someone be a little bit more of an extension on your team or something like that, rather than just kind of your customer support. So great question. And then Logan, another question is, what's your timeline to create other product or nuanced categories beyond just SaaS? If you want to take that one. So
yes.
Yep.
Yeah. So, and our plan was whenever we went to market, we wanted to kind of capture the big models first, just because there's a lot of companies that have that SaaS business model. I will say, like, in terms of software, the biggest lift was just getting the back end functionality to create a variety of models. And we've kind of gotten over that hump. So we believe that creating these new business models, like things like bolting on e-commerce or services or what have you, and then you can kind of customize and configure and make the model based off of those. I don't think that those are going to take nearly as long as getting like the back end architecture set up. So I would say timeline, it's a really tough to like kind of like, give a specific time frame for when all of these are going to be built. But I will say that it should just be, I don't know, Stephen, what would you say? Like, I mean, it was months after our launch, which is the SaaS launch is going to be probably mid-July, late June, mid-July. So
Yeah, I'd say we'll be tackling different business models sequentially. We're starting with SaaS, like Logan described. We'll likely have e-commerce and marketplace built out. I would say certainly by the end of the year, that would be a good probably target for us. But like Logan mentioned, everything is kind of subject to change. And then we'll be adding additional business models more or less as demand calls for it. As we'll kind of follow the folks that want to become users of our product, and we'll build out. We'll make sure we have the functionality to service them. So that'll be the rollout there. And yes, Janet asked if the session's recorded so that she can watch the part she missed. Yes, it absolutely is. Logan will be sharing the webinar here once we hop off, and we'll send you an email with a link to that and everything. And then Phelan asked, does the Forecastr platform provide guidance on how to price a company's subscription or services? So kind of guidance on, what the assumptions should be in the financial model. Logan, if you want to take that one.
Yeah, for sure. So like, that's always a tough question, right? Whenever you're creating any kind of like a product or service, like what do you price at? And I would say that a financial model is going to be one of the most instrumental things in answering that question, because what you need to understand is how many customers do you need to get at a specific price point? What is your customer acquisition funnel, and how can you create it in a way that is not unrealistic but can still support a price point? So I would say, yes, Forecastr is definitely going to be something that you're going to want to rely heavily on whenever trying to determine the price of your product. And Stephen and I have a ton of expertise or a ton of experience, I will say, in guiding companies through this type of stuff. And like Stephen mentioned, it's a white glove services, so we'll definitely be your soundboard whenever we're looking at different prices. We'll run a bunch of scenarios. We'll figure out what makes the most sense for your business.
Yeah, and I'd like to jump in there and just add that one of the coolest things we think about the platform is the ability to help founders validate or invalidate their assumptions over time. We have a lot of features planned for what we call anonymous benchmarking. So, once we're able to get a large percentage of companies, using our product and therefore having kind of a standardized way of predicting their companies, we can really start to offer a lot of kind of anonymous peer-to-peer benchmarking to basically let you know more or less how you're kind of falling in the grand scheme of things against peer companies. And so in that way, you can validate or invalidate conversion assumptions or growth assumptions based on other peers, as well as pricing. Also, you can start to kind of get better data on those assumptions so that you're not just kind of putting assumptions in a vacuum.
And Sam, thanks for the kind words. Sam's an awesome founder. He's given us a shout out. He's also one of our early customers. So appreciate you. Appreciate you coming here and appreciate the support. All right. Well, I mean, if there's any other questions, obviously feel free to throw them in the. Oh, here we had another one just come in. Will there be a market research integration? Depends on what you. I guess it depends on kind of like what you mean by market research. Like one of the biggest benefits of, like I mentioned, having a standardized process for building a financial model is that it allows you to compare yourself with all of the other companies that are on the Forecastr platform. As we continue to grow and as we continue to get more and more companies on, we'll be able to leverage all of that data from all of these different companies, anonymize it, but then allow you to use that data for your assumptions. So whenever you're looking at things like, just using the software or the SaaS example that I went through, if you're looking at things like a churn rate for your industry, or looking at things like the average price point for a company at your stage, or how you should be paying certain people, like that type of research, that anonymized benchmarking research will be really good for like building out your the data that's backing your model. Now, any more like detailed, nuanced research in terms of like more specific things, like that's not really on our product roadmap right now. But if you're looking at like more gut checking on assumption type stuff, that will be included.
Yeah, and there I'll just jump in and add too, we do have plans for, for example, like hiring people and how much should you pay them, what's market rate for various people. We do have plans at some point, not sure exactly when this will fall in terms of priority, but would be to, integrate with something like a Glassdoor or a Connolly for salary data and help you, kind of put market rate assumptions in for your hires. So there's kind of a variety of kind of micro instances like that where we might try to add integration or kind of pull data into the platform to help you, and we'll kind of roll those out, as quickly as we can. But yeah.
Sure. And yes. Oh yeah. Okay. Perfect. Oh yeah. So everyone, thank you all so much for joining. We definitely appreciate all the support here. And like I mentioned earlier, if anybody has any questions or needs help with their financial models in any capacity, this is what Steven and I do. It's what we love doing. It's why we're here. Please feel free to reach out to us or reply to my email that I'll be sending to everybody. We're trying to kind of like build a tribe here, and you do that with great people like you all. And so we'd love the engagement. Other than that, I think we're good to hop off here. So thank you all again so much.
Nice. Absolutely. Have a great day, everybody.
Give me a second.